It's going to be based off the application. That loan officer may ask for documents. They'll, in most cases, it's verbally confirmed of the information that they put on the application, and they run it through what's known as an automated underwriting system, and that gives a good result. You're pre-qualified.
Does that mean they'll get approved?
No matter if you get pre-qualified or pre-approved, there is some blanket, vague language in there. It's usually a sentence in bold or at the bottom saying, this is not a lending decision.
So before my wife and I bought a house, there was the pre-qualification and the pre-approval. This is our second home. So I actually wasn't involved in the first purchase. It was just kind of her. She bought it, that. Then we bought this one. It was sending the information, and I thought that was it. That's basically what's going to get us rolling. And then there's this big packet that comes after, and you got to get all this stuff in. So what's the difference between the pre-approval, pre-qualification?
Yeah. So it's a great question, Paul. And the biggest thing I can say is that it's going to vary by lender that you're working with. Okay. And it's crucial for a home buyer to know the difference from that specific lender. And like I said, it's going to vary by lender. So a pre-qualification, they'll be working with the loan officer, and it's going to be based off the application. That loan officer may ask for documents. They'll, in most cases, it's verbally confirmed of the information that they put on the application, and they run it through what's known as an automated underwriting system, and that gives a good result. You're pre-qualified.
Does that mean they'll get approved?
No.
Okay.
Now, pre-approval is when working with the loan officer. They're going to be asking for documentation. They're going to be reviewing credit, income, and assets. Okay. Credit is the score eligible for that, whatever the loan program they're going to be working with, or whatever suitable customized program that the client's eligible for. Income, looking at the last 30 days of pay stubs, if they're W-2 or employee, so hourly or salary, 30 days of pay stubs, somewhere between the last 2 or 3 years, first-time home buyer of W-2s. The reason for that is to see any significant increase or decrease in income, part-time to full-time, big-time promotion. There's a threshold for increases that have to be explainable
Sure.
to be qualified for the mortgage. And then the assets, do you have enough for down payment, closing costs, and depending on the purchase for an investment property, may have some reserve requirements. We're collecting financial documentation to verify all of that information. Once again, going through an automated underwriting system, getting a good result, you're now then pre-approved. No matter if you get pre-qualified or pre-approved, there is some blanket, vague language in there. It's usually a sentence in bold or at the bottom saying, this is not a lending decision.
If it's not a lending decision, this is just I'm going to be a proxy for the person who wants to know this.
Yes.
Is that a soft hit or a hard hit on the credit?
Once again, it's going to vary by lender.
Mm-hmm.
So some pre-qualifications by a lender will have a soft credit pull. Some may have a hard credit pull. It all depends on what that lender is offering and what they have the capability to. Some don't have the capability to do a soft credit pull.
Okay.
So that is a question when a home buyer's interviewing a lender, or they've been referred to a lender by a realtor or insurance agent or attorney, whoever it might be. That's a question to ask.
Mm-hmm.
Because the home buyer should have expectations of who they want to work with and why.
Sure.
I want them to be roughly my age. I'm looking for these X, Y, and Z loan programs. I need down payment assistance. I want someone that's going to be available. There's numerous factors and reasons why someone wants to work with someone, but is it a hard credit pull versus soft credit pull? It can vary on pre-qualification. Pre-approval will require a hard credit pull.
And the language to a buyer is, you have been pre-qualified versus you have been pre-approved. Let's go into it here in a second. I'm with Colin Lacey, mortgage loan officer. I'm Paul Martinez, insurance agent, licensed in Connecticut and Massachusetts. Let's talk through the stages.
Yes.
The pre-qualification. Hey, pre-qualified, excited. Oh, I'm about to buy a house.
Yep. Then
Then you have the pre-approval. Oh, cool. I thought I was already approved before I saw the pre-qualification, but then you were approved.
Yep.
The 3 phases. You talked about the qualification, the pre-approval.
Yep.
The gap there. Let's kind of address the gap.
So it's one or the other. You're either pre-qualified or pre-approved.
Okay.
You don't go from elevate from pre-qualified to pre-approved.
So it's not 3 stages. It's one or the other.
It's one or the other. Yeah.
Okay.
And that, like I said, it varies by lender. So, and from a competitive standpoint, because realtors have come accustomed to this, is that they are aware that a pre-qualification, the letter itself, when they see the words pre-qualification, the assumption that gets made, and this is not a guarantee, but it's an assumption that there was very little financial documentation collected to verify the information.
Got it.
So pre-approval is they are aware that that loan officer has more than likely, once again, no guarantees, more than likely collected financial documentation, verified it as part of that analysis to provide their pre-approval to the client. So, and at that point, this is all done by the loan officer. So that's why it's pre. So pre Latin means before.
Yes.
So that's all before you get actually into, once you get an accepted offer, now you're actually in the loan approval process.
Got it.
The most important person of the loan approval process outside of the client is the underwriter. I get to deliver the message, the happy message that the underwriter has approved it. We're now clear to close. That is one of the best moments I get to do every day, is to say, you are clear to close. Let's get in touch with the attorney. Let's get it scheduled. Let's have your closing happen. You're now one step closer to becoming a homeowner.
In a perfect world, what's the timetable of going from either or pre-qualify to or pre-approval to approved, and being able to be at that clear to close? Everything is lined up.
Yeah, those pre-qualifications, and you may see it online, you hear it on the radio, radio advertisement. You can be pre-qualified in 3 minutes. Once again, you can't provide that much financial documentation that quickly to be, to
Is
be
that
verified.
misrepresentation?
No, I mean, there's systems out there that are doing it based on the stated information. But when you say stated information, oh, my income is X. Well, yes, but there are eligible income requirements to confirm that number is eligible. So if you're just going off of the stated information, yeah, that could pass. Doesn't mean it does. So that's why this is not a lending decision.
Sure.
So no, those, I've seen clients do it, and it does happen. But from a pre-approval perspective, collecting the financial documentations, once the loan officer has that, I like to have it turned around within 24 hours. Now, what I'm also looking to do is educate the client. This is your maximum per the guidelines that you are eligible for. This is what the monthly payment would look like based on principal and interest, conservatively estimated
Insurance.
Yep. And then I like to verify the real estate taxes. It's accessible on most towns and cities, whether it's Connecticut or Massachusetts, have it on their town website. So you can actually go look it up by the address. So I can confirm principal and interest. In most cases, I can confirm real estate taxes. And in working with insurance agents, conservative estimate. Here's your maximum monthly payment with this maximum purchase price. Then we work backwards from a comfortable standpoint. I don't want my monthly payment over $3,500. Okay, let's work backwards and let's see what that purchase price comes out to. Now, to answer your question, from pre-approval, because I can do either or right now. I can do a pre-qualification or a pre-approval. Okay. Once that's done, they get an accepted offer. Right now, in competitive market standpoint, 30 days or less is what we're seeing. Anything outside of that is going to be, it's a vacant home, so the 30 days does not need to be rushed. Something like that might be outside of that. But in most cases, and we're seeing it a lot too, because that seller is now going somewhere else too. So this is going to get done in 30 days because their next transactions also needs to be done in 30 days. So I would, that's the expectation that I set forth. But then I also, that first 72 hours after an accepted offer, a lot of phone calls, a lot of texts, a lot of emails, not just with the client, but the realtor, the insurance agent. I'm getting that conversation started right away. So
in the insurance process, right, there's the shopping,
yes,
if you will. So, I always advocate for the independent insurance agent because they have access to multiple carriers, the big names, the smaller names, the regional names, the names that are, maybe not most notable in the sense of financial stability, but they have products, right?
Right.
So that is easy for me to pitch. Is that similar for you as a loan officer to say, hey, I have these options of loans, or do clients shop the loan officer as well in that beginning phase? So, the pre-approval to, pre-qualification phase, do you find that there's shopping of a loan officer?
More times than not,
Yeah.
yes.
Okay.
I'm hearing that I'm working with multiple lenders, or
Yeah.
I'm shopping multiple lenders
Yeah.
and seeing what's out there. What I would say as a recommendation, obviously not financial advice,
Sure.
not legal advice, but just my recommendation. And I in today's environment, in thinking of making the largest financial decision of one's life,
Mhm.
purchasing a home, a second opinion is not harmful.
Yeah.
I think it's actually helpful because each presentation between the two or three different lenders is going to be different.
Like what? Yeah. We'll say like what? Like what is the?
So going over what a down payment actually means,
Okay.
what's actually included in the closing costs, loan program availability.
Yeah.
So
And does that differ from officer to officer? So like if I went to a mortgage company and a B mortgage company, are the loan offerings going to be similar or?
in theory, they're going to be similar.
Yeah.
It just how robust it actually is.
Right.
So you could have a lender that's only got maybe a little smaller portfolio of programs, like somewhere between 30, 35,
Mhm.
or you can go to some of the larger ones. They have over 100.
Got it.
And it's really just trying to funnel that down through education to the client of, okay, this is where I can start. I'm going to funnel it down to, ideally, I'd like to give at least 2, if not 3 options of
Where they could go.
this is where we can go. Then that's the education piece to empower the client to make the decision. And it, quite frankly, more times than not, it varies through the entire
Yeah,
process too.
yeah.
So it's a constant communication, and that's working with the realtor as well. And because the realtors got the information of what the client's actually trying to purchase,
Yes.
the towns, the layout of the house, the yard, whatever the client's
That's
looking
so
for.
huge too. Like when you think about the house, you're not just buying the house, you're buying the town that you're in, the people that you're going to be around, that community.
Yep.
I guess I never really thought about it from that perspective. It's like, oh, I got this nice house, like cool, but it's like I'm also in a really nice town.
Right.
What have you seen gone wrong early in the phase of like the pre-approval pre-qualification? If it's like, is it detrimental? Is it like, is it blindsiding clients kind of thing, or is it just like?
So, it's tough to say because it will vary. But the biggest thing is there's a lot of things out there to say. There's do's and don'ts during their pre-approval process, and especially the loan approval process. They're going to say don't change jobs. I'm not saying don't change jobs because I don't know what's happening. That could be a lifestyle change. Something could have occurred. I'm not saying don't change jobs. The loan officer should be made aware of what's going on.
Mhm.
I'm switching jobs. I'm going to be, if you're staying in the same field, great. Happy to hear it. Congratulations. When you do get an employment letter, can you get that over to me? I got to buy a new car. Something happened. Great. Just let me know. Let me know how much that payment's going to be. I'll redo your analysis to learn that. So I don't want to say anything goes awry or goes wrong because life happens.
Sure.
It just, how do we pivot?
Yeah.
And be proactive to, it's a little bit like now we're being, we got to react.
Yeah.
But let's be proactive with that approach because now I know.
I got a scenario for you, and I'm curious how you would run it during this stage. I had a client who purchasing a house,
Yeah.
beautiful home, older home, built in the 1800s, but beautiful home. Insurance premium worked out for DTI, was perfect.
Awesome.
And about 2 weeks in or 3 weeks in, they refinanced their car before closing, and it adjusted
Mhm.
their DTI. When that happens, what's the play? Is it now you got to find a lower insurance rate, or is it, do you have to find more income? Like, what's that play? Because, from trying to understand and also teach that, like, this could be a delay in your closing process, or may not, in terms of the timing of it.
Mhm.
So I'm curious, like, because I feel like this client wasn't educated as to knowing they shouldn't have done that, or they should have, but it definitely delayed their closing. They were frustrated with the insurance and all that stuff. And you try to coach them through, like, hey, this is, as the insurance agent, it's kind of out of my control. But what's that like? What's that look like?
So in that particular scenario, I'm saying, because in most cases, when you do the refinance and you close on it, the client's walking away with either, zip drive or a PDF or a physical copy of the paperwork.
Yeah.
I need a copy of that paperwork so I can present it to the underwriter, that loan approver, to say, hey, like this is where it was on the credit report, Honda Financial, whatever company it was with. And now it's this refinance with this local institution or wherever they refinanced it. Here's the new terms and here's the payment. How does it impact our DTI? Because debt to income ratio is one of the key factors for me to determine interest rate. Has this impacted, if we've rate locked it, has this changed the loan structure to now impact the interest rate? That is the bigger factor of the debt to income, is the interest rate, because we're talking hundreds of thousands of dollars at that interest rate.
Yeah.
By changing that number, even by, depending on the loan size, an eighth of an interest rate, so 0.125, that could have it go $75 to $100 or more, depending on the loan size, of an impact. That's the more crucial part. But if you're doing a refinance to lower the payment, great. Just make your loan officer aware when you apply for it, because it's another credit hit. We're going to find out. We just don't want to find out 24 hours before closing.
What would happen if that was the case? To delay the closing completely? Can it be like reworked right there? Yeah.
It all depends. Like if you're talking a closing the next day in the afternoon, I mean, we've pulled it off.
Yeah.
It was not easy.
Sounds stressful.
As long as cooler heads can come together and just say, A, this is what happened. B, what is our plan to get to the approval, to get to the closing table, reworked. And C, who's executing on what?
Yeah.
Because I think that in that situation, that's the biggest piece, is car insurance. Do we do the auto insurance? And, does it impact the homeowner's insurance? How does it impact the DTI? How does it impact the interest rate? How does it impact the mortgage? Everyone needs to work on their piece, because I don't like delivering messages to, say, the buyer's realtor, who then has to talk to the listing agent to say, this is what just happened. Okay, so what next? I want to have that answer of what's next. Like, hey, this is what happened. This is our plan of action. As soon as I have more information and more updates to give you, you will know.
Got it.
So, like I said, I know it's happened before. I've personally experienced that with clients before. Have we pulled it off in a day? Yes. It's not ideal.
Yeah.
But life happens.
As a LO loan officer, what is a sign of a strong pre-approval? Like when like, hey, Paul, everything checks the boxes. I think we're ready to roll with this.
Like I said, we're looking at credit, income, and assets. So as long as we have those three primary factors secured, we are looking at a strong pre-approved client. Now, that's from the financing side. Now, there's another factor of, looking at the homes now, because I think that's the more stressful part. Yes, on paper, strong pre-approved client. Going to look at a home, that's an emotional, I like this room, I don't like that room. That's a whole different conversation to have. But from it's a great question to try to answer, but I'm answering on someone's behalf. So I can't,
sure.
On paper, as long as I can give them a pre-approval, to me, my work, that client's a strong pre-approved buyer.
Got it.
How that looks to someone else, especially the home buyer, that's on the confidence that I provide to them.
Yeah.
To give them that pre-approval. That's where that comes into play.
So we're going to have, obviously, later on and throughout this podcast, we're going to have different guests. And I think a good guest that we can have on is a financial advisor, right? I think they can really talk to someone's financial situation and whether or not, people are in over the head on certain things. What I've seen over the last probably 2 years, 3 years, that people are really, especially like renters and stuff like that, they really feel that they need to buy a house. Their families are growing. They're having children. They've gotten married, and they just feel the pressure of like, I can't keep renting anymore, right? When that happens, and I've seen a handful of people that I know personally in my circle, not referrals, but personally in my circle, I've seen people go well above their budget. They've gotten approved for $700,000 or $500,000, and they're looking at the $350,000 house or the $400,000 house, and they got outbid, and they keep going up and up.
Yeah.
And they buy the house anyway. And now it's the taxes, it's the insurance, it's the maintenance. It's all of that encompassing that, you bought the house and it feels good, but now you have to live in the house.
Right.
In the pre-approval process, are those conversations being had? Like, hey, you got approved for this. And again, whether it's not, and that's why I think a financial advisor is going to be a really good person to sit in and talk about this stuff.
Yeah. Yeah.
But are those discussions that you're having with potential, buyers, or are you like, it's not my payment kind of thing?
No, I am having that conversation, whether they're a first-time home buyer or not, because you're not a first-time home buyer. You might be buying a bigger house. Well, bigger house has more responsibility too.
Right.
So
Tell me about it.
yeah, you probably experienced that firsthand.
Yes.
So from a first-time home buyer perspective, yes, I'm having the conversations like, this is your maximum, like I talked about. I will go to the maximum per the guidelines, and we work our way into comfortable payment. When I talk about comfortable payment, we're looking at a single-family home. Okay, you're going to have in New England, just being realistic, in Mass and Connecticut. Like I said, I am licensed in Florida, but that's a different conversation down there. But like up here in New England, lawn care,
Yep.
not just mowing it. Are you going to treat it? That's two different costs. That's a couple $100s a month, easy. Snow removal. Are you going to have someone plow it? You're going to buy a snow blower.
Especially this last winter.
Right. And you got to gas, oil, upkeep it. Another cost and expense. You have a pet. It doesn't have an invisible fence in, or whatever the current technology is. Are you going to do that? It doesn't have a fence. I'm going to put up a fence. There are so many added costs. Buy shovels for the snow removal. You're going to do it yourself by hand. Those are conversations I'm having to say before deciding what you feel comfortable with from a monthly payment perspective. Just be aware of, from my own personal experience, when I bought my home, I learned a lot of things real fast.
Yeah.
And, luckily I lived in the same town as my family, so I had support there. Like, I broke a shovel during the first snowstorm I had. I was like, of course. Like,
Yeah.
So, but I got a chance. I had a big Jeep. I'm like, all right, I'll drive through the snow, go to my parents' house. I grabbed 2 more shovels because they had extras.
Yep.
Came back and shoveled the driveway. So those are conversations I am having, but also bigger house. That could be more problems. The oil tank, furnace, you're heating and cooling a bigger home, the HVAC. When you're heating and cooling a bigger home, a lot more can go wrong because it's running to do more square footage. Cleaning, how many vacuums you're going to have, and are you going to pay someone to come and do it? So those are conversations I'm having with home buyers all the time. More times than not, their willingness to listen, to at least think about it.
Yeah.
It's very, very few they're just like, nah, I'm all set. Like, We don't have to go into this. I know what the payment I want is.
Yeah.
I'm like, all right, that's fair to say too.
Sure.
But I'd rather be in that conversation, getting ahead of it, because my biggest goal is not to have buyer's remorse or buyer's regret.
Right.
Because if that person comes back to me especially within a year, this was just way too much, that this is too big of a bite that I can chew on. I do not want to have that conversation. I dread having to hear that phone call. And the client will say, because it's the first thing that they'll say is, I called my loan officer. It was too much house.
Yeah.
And they're going to tell other people I shouldn't have done this.
Wow.
And the first person they're going to look at to blame, probably going to be the loan officer that said, hey, you are qualified. You are approved to do this.
Yeah.
I do not want that to happen for the individual or that family.
Right.
Because now you got to impact them again. They just moved. Now they can move out. They can't own a home anymore. They have to go back to renting. That's an emotional toll.
Sure.
I never want to have. My goal is to never have that happen.
Yeah. That's huge, man. And I think because it's such an emotional purchase, like it's very easy. Like we kind of explained on episode 1 when we got into our careers in the honeymoon phase of getting into the industry and knowing how much money you can make and making the connections and stuff like that. That is also true for a first time homeowner.
Yeah.
And as they go through it, what is one of the most misunderstood pieces of the pre-approval? And we'll wrap up here in a bit.
So I would think the most understood about the pre-approval is that it can be done so quickly. A thorough pre-approval is going to take time, but just to answer the questions timely and provide the documentation timely, if both sides set expectations with each other and it's very transparent up front, it's going to be a great process. And that really sets up everything for the loan approval process.
Yeah.
Once you get the accepted offer. So to have a rocky start is not great. So that's the piece that I would say is, crucial from a pre-approval standpoint, is if that process goes smooth, the loan approval process. Hey, this is X, Y, and Z that I need. Here's your next action steps. Let's take those. Let's get them done. And then we're off and running.
Yeah.
So
when we'll bridge into like the kind of insurance piece of this. Again, we touched on episode 1 a little bit, but what's an ideal situation for a client? Like for me, I move really quickly. So I don't, somebody asked me the same question. Well, like, when would you like to have the insurance? Ideally, not the week of closing, and that happens. Closing in 2 days or 3 days. I need an insurance quote. So-and-so told me to call you, or something went wrong with XYZ carrier, and here we are. For you as a loan officer, because the insurance is a big piece into the DTI, right? When is it fit for you? Like when is it a good time for you to get the estimate for the client from the agent?
I would love to have it the next day. No,
Yeah.
I'm kidding. So the biggest thing is for me when I'm working with clients is that we get the accepted offer. I get the executed contract. So they're fully signed by both buyers and sellers. I get that paperwork because I need that to go through, because that's got all the dates on there and the actual agreement of the terms and, inspections, no inspections, and who the closing attorney is. I need all that information so that I can provide the initial package known as the initial disclosure package to say that this is a packet of paper to be signed by the client that I review with the client or clients every time to say, this is how your loan structure to purchase 123 Main Street at this purchase price. This is your loan amount. So here's your down payment. We'll go into the closing cost page during the package.
Mm-hmm.
I need to do all of that. And I need to get that out within 3 business days.
Mm-hmm.
That's a regulation that I need to get out within 3 business days. And to have that signed, because getting that signed by the client, that gives me the intent to proceed, which then we can order the appraisal, because that's a week process normally to get it out for order, assigned, scheduled, back into us for review. So that first 72 hours, I would like to have that package out, reviewed, signed back to me, appraisal ordered, and introduction or learning who they're working with from an insurance agent perspective. Who is that individual?
Yeah.
I'd like to have their contact information so we can email them to at least introduce ourselves.
Mm-hmm.
And then I can give them updates on the loan status, very basic information that I can share. Can't share everything, but I can share some basic information with the insurance agent about the status.
Yep.
So I want to know that individual, or at least know that they're working on interviewing an insurance agent or insurance agents to see who's going to quote them the policy.
So speaking of quote, there's oftentimes I have a buyer coming to me that says, hey, I need a quote for insurance to present to my lender. And then there's also the one that says, hey, I need a binder.
Correct.
Obviously, I know what the two are. So the quote is a proposal. Here's how much the insurance is going to cost. The binder is coverage is active this date for the year, right? It seems to me that some of the clients that come over might be a little confused as to what that is. Me as the agent, I'm trying to be proactive. If you're closing in 30 days, I want the policy written pretty much now.
Right.
Like, let's get this done if you can.
Me too.
Yeah, right. For you as a loan officer, the quote gives you an idea of what it's going to cost. You just said you would pretty much want the binder pretty much immediately. But it seems like there's a little bit of knowledge gap between what the client should or shouldn't do. What is the ideal scenario? Like, I send you, here you go, here's the quote for Jane Smith, $2,000 a year on 123 ABC Street. Here you go, here's the quote. The customer likes it, she likes me. We go from there, right? Yep. What's the path forward for you as a loan officer? Is it what you would like to see?
Yeah, so when we have the accepted offer, the initial disclosure package goes out, comes back in, we get the appraisal ordered. The next piece that we're looking at getting done for the client, we may need updated documents depending on when the pre-approval was done. And we'll get those in as soon as possible.
Sure.
The reason for that is that most important person that I talked about from the lending side is the underwriter. Ideally, we would like to have as much verified information in our system possible before their initial review.
Right.
So to have that insurance quote done before the underwriter's initial review, because as part of that contract that I was talking about, there's going to be in most cases, sometimes it is waived, but there is a mortgage contingency or mortgage commitment date. We have to meet that as the lender. With more information we can put in front of the underwriter before they do their initial commitment, the better. Because when that gets turned back out to us that we give to the client, the less items on there, the more comfort that gets explained to the seller as well as the listing agent of where the loan status is.
Got it.
Hey, we're just waiting on the appraisal and title work to come in. I love delivering that message because we have the updated pay stubs, bank statements, the insurance quotes already in. We now have a very strong picture of the DTI. Okay, appraisal's in, good. All right, now we're doing the rate lock and we're clear to close.
Yeah. With so there's clear to close, which is the effective date that I would do. Give me a percentage of, and I don't know if you can, but give me a percentage. If you say you're clear to close, or sorry, your estimated closing date is June 20th. How often are you guys in line with that?
98%.
That's good. That's good to know. That's actually,
that 2%, it's not always that 2%. That could be seller side, buyer side, or an outside factor.
Sure.
We thought the appraisal would come back good as is. It's asking for a repair.
Yeah.
Can't get someone out there to repair it till next week. That's out of everyone's control. It does pop up. It's out of everyone's control. Just how do we communicate and how do we plan to move forward?
Yep.
People take vacations and sometimes it just doesn't get communicated. The insurance agent was out, or the title attorney, the email is no longer valid. Like, we're trying to eliminate all those headaches. We understand things do pop up and things do arise. Acquisitions and mergers, it's not just happening between mortgage lenders and banks and insurance companies. Attorneys' offices are going through it. So just learning all that. And then, in Massachusetts, the inspection, you get 10 days to do it. They get out there in a week.
Yeah.
Now our window's a little tighter on that 30-day closing. So the clear to close is just the notice that we can schedule the closing.
Got it.
To meet that closing date, especially with that 30-day window, I would, 98%. And like I said, that 2% it's not 100% from the lending side of things. There's other outside factors that play into that. But it's really just the communication aspect that through the whole process, and hopefully the client's stress-free through that whole time too.
Absolutely. So we covered the pre-approval process, the pre-qualification, that being kind of one or the other, the approval process and the steps that you go through as a loan officer. What's one takeaway for a listener, prospective buyer, or for that matter, who we try to hand off the information to, a loan officer that's coming up and trying to launch their career? What's one thing out of the pre-approval process that you would say to both?
Communication. So, the last 2-3 weeks, I've seen so many different AI presenters, and there's so much statistical data. I know you're a stats guy too. There's so much statistical data, and it all depends on the survey that's being done and what demographic makes up that survey. But from a communication aspect, this past week I was at a seminar, and this will probably relate to most. From a communication standpoint, most use Amazon, right? It tells you when you've ordered something, when something is shipped, if it's been delayed, what the new delivery date will be. It's out for delivery, and then a photo of when it's been delivered, where it is.
Yeah.
That's 5 times.
Right.
There was a statistic that I just saw this week that over 60% of the time, a buyer's not receiving any notification.
Wow. That's a big number.
That's a big number. Over half the time, they have no status update of where their loan sits.
Wow.
For their biggest financial purchase.
Yeah, that's nuts.
So that 72 hours, I warned the client, congratulations, you're under accepted offer. You'll probably be annoyed with me in the first 72 hours because you're going to get emails, you're going to get calls, you're going to get text messages, but it's crucial time.
Yeah, so setting the right expectation to the client is the number one thing about communication. Like, here's what to look forward to, and here's where we are. So episode 2 of the Handoff. Loving this vibe, man. This is going to be fun.
So part of the handoff is like we talked about, and I want to hear from you, Paul, on this, the insurance aspect. What does the handoff look like to you? What do you prefer as part of that? From a ideally, be introduced during the pre-approval process.
Mm-hmm.
But when it's loan time,
Yeah.
that handoff to you, from my perspective, getting it off to you early, but like, what do you want to know about the client? What would you like to know about them personally, professionally, the home? Do you want to hear from the loan officer? Do you want to hear from the client? Because I think the client should really know what's their, when you ask a client, what kind of heat source do you have?
Yeah.
I don't know.
Right.
That's a tough
That
response
is.
sometimes.
It really is.
Sure for you to hear. So what does that handoff look like to you from the loan officer perspective of giving you the chance to work with that client?
Yeah. I'll tell you the ones that I find the most, that are easier are the ones that just say, hey, Colin told me to call you. Oh, what do you got going on? Oh, I'm buying a house. Perfect. That is really the easiest approach for me. In one, we live in a really heightened time where data and information is very valuable. So, I used to deal with folks who would send me name, address, phone number through email, and that's okay. But it's not as warm as you saying, hey, call Paul Martinez. He's going to help you with your insurance. Ideally, I would say, and maybe you can keep me honest on here because I can't really remember, when they do their inspections on the house is about the time where I would like the introduction, maybe, a week out from their inspection. Hey, let's get everything in the system. This is what I'm going to do. We're going to get your name, basic info. We're going to quote the auto. We're going to quote the home. And we're going to look at what options are available. Most people, when they are buying their house, they have the number one thing that they have a general idea of is the roof, how old the roof is.
Right.
Most people, by visual, they won't find the details out until probably, more detailed, probably in the inspection. And that's where it's important to find out how old is the heating, which you just mentioned, how old is the roof, how old is the electric, the plumbing, things like that. That if I could get that information about a couple of days after the inspection, because I think at that point it's probably 30 days or so out from closing, that's pretty reasonable. So the introduction doesn't have to come when you meet the person or with the realtor meets the person. I would say right before the inspection, which is about the time, gives me a good picture of like, they're really serious about buying this. And I'm okay with like, sometimes people are like house shopping and they're looking for quotes, but those not because of anything other than I'm busy. I will do that for people. Like, hey, I can give you a general idea, but interest rates change.
Yeah.
Insurance rates can change. So I can give you this quote, but you're not buying this house for maybe 60, 90, 180. It's going to change for sure. So that, I would say right around the inspection.
Yeah. And it is tough too. So the reason I'm so proactive with it is I don't know everything that they have that should be reviewed from an insurance perspective.
Yes, yeah.
So I'm like, have the conversation. So, do I do it too early sometimes? I may, but I don't know the full picture from the auto insurance or pet insurance or whatever they might have. You talked about a liability policy or an umbrella policy too. Like those are the conversations that it is a lot to take in, especially for a first-time home buyer. I will say this. You're going through the largest financial transaction of your life up until that point, to the next property. They're learning a lot of that process. Now they're most likely getting their first ever policy on their own, away from a family policy.
Correct.
So now they're learning two things that are quite costly to go through at the same time.
Yeah.
How hard is that?
Right.
Like I went through it, but I was in the industry.
Yeah.
It was hard for me. So like someone that's not in the industry, I have clients tell me all the time, I'm listening to what you're saying to me. I'm going off what you're telling me. And I'm like, okay, like that's a lot of pressure, but it's like, that excites me.
Yeah.
So, being we're talking about pre-approval, that's the in-depth analysis that I'm looking to cover ahead of time so that when it's, I look at it as practice and game time. Once it's game time, accepted offer. All right, we're ready, tip off, kick off, whatever it is, first pitch. We already know what to expect.
Sure.
Here's the process. We've had the preliminary conversation. So that's why, I want to get your insight too.
Yeah, definitely.
There's a lot for you to go because now you have to educate too.
Yeah. Yeah, no, and that's the big thing is the education piece. And a lot of people who come over to me, I outline and we'll go through it as we build this podcast, we'll go through what a presentation looks like from the insurance side of things. Because a lot of, again, you asked me in the first episode, like what is insurance as 10,000 feet overview. And it's not just you're closing on your house.
Right.
And I think that's I don't want to say it's a misconception, but it's definitely overlooked. It's oh yeah, I got the paper, I can close on my house now.
Yeah.
Well, here's what's covered under that, and which we'll go into
Yep.
in maybe episode 3. We'll talk a little bit about it. So
the one thing I do want to give a takeaway, the biggest takeaway I can possibly give right now, offhand, is that whether it's the client or, the other professional out there, another loan officer, is that setting up your buyer's team as a client to have that in place, whether it's car or the home, for, doing auto insurance, having your buyer's team in place is, when I say buyer's team, we're talking the client or clients, loan officer, insurance agent, realtor, closing attorney, and potentially an inspector. That's a lot of people to be talking with at once. So to have that buyer's team solidified as early as possible and feel comfortable and confident in that buyer's team, because the pre-approval is just a piece of paper.
Sure.
The paper is supported by the loan officer, who's supported by the estimate of insurance, in working with my knowledge of an insurance agent. From a realtor's perspective, looking at, okay, here's X, Y, and Z to, it's listed for $350,000. We should go for an offer of $375,000. That's their expertise. My expertise on the financing based on estimates of insurance. Inspector is going to come in and say, critical, medium, low risk items. So this piece of paper is supported not just by the loan officer, it's supported by the entire buyer's team.
Yes.
So I think that is the biggest takeaway I can have, especially for first-time home buyers, but any buyer out there now in the tough market, have your buyer's team feel comfortable and feel confident in that.
Yeah, 1,000%. So episode 2 of The Handoff. Colin, thank you very much. Make sure you guys subscribe to the channel. The Handoff is a new podcast where we're going to be sharing insights on our industries, mortgage, insurance, handing off valuable information to entrepreneurs, people who want to come into the industry, and those who want to learn about buying a house and the steps that it takes to go through it. So, Colin, always a pleasure. Catch you guys next time.